Nike, the most iconic name in sportswear, the one that shaped generations and redefined athletic culture. From the courts to the catwalks, from LeBron to the local gyms, Nike shows up everywhere. You've worn it, I've worn it. It's more than just gear, it's a part of the culture. But lately, Nike has fallen and Wall Street has taken a notice. From once being $177 per share, Nike has dropped over 65% and is around $60 a share today, and now it sits around the same price it did about 8 years ago. Most investors see this and walk away, but I see this as a setup, the kind that rarely comes around. A world-class brand down 65%, trading like it's lost forever, but it hasn't. And that's why Nike is one of my biggest positions today. This isn't a panic, but it's potential, and if you know what you're looking for, this could be one of the most profitable opportunities in the market this decade. Before I get started, I want to give a disclaimer. I'm not a financial advisor, and this is not financial advice. This is my personal opinion based on my research, and you should always do your own research. To understand why Nike is an opportunity in the market today, we need to look back at the CEO history, leadership failures, economic factors, to really see why things went wrong and how they're going to be fixed. At the core of Nike's rise was Phil Knight, a former track athlete with a vision. In 1964, he teamed with his coach, Bill Bowerman, to form Blue Ribbon Sports, which later became Nike. Knight wasn't just selling sneakers, he was selling a mindset, one that was rooted in speed, risk, and performance. He connected with athletes in ways no other brand could. He signed icons like Michael Jordan, and he launched emotional campaigns that became part of what Nike is. The foundation, performance-driven, athlete-first, and emotionally charged, is what built Nike into the powerhouse it is. And with recent leadership, that has all been lost. There's been 2 cases in Nike's history where outsiders came in and took over as CEO. Both of these times, they failed pretty bad. The first one was William Perez in 2004. William Perez came from S.E. Johnson, a traditional consumer good company. Perez didn't come from sports, and he didn't understand the culture that Knight built. His mindset clashed with Nike's athlete-driven identity, and the things that made Nike great, the bold moves, the speed, and the marketing swagger, didn't resonate with him. He tried to bring structure to a brand that was built on chaos and creativity, and that didn't work. Phil Knight saw the disconnect fast, and Perez was out in less than 2 years. The second time Nike brought in an outsider for CEO was after Mark Parker's run, which was after 2006 to 2020. They brought in John Donahoe. He had backgrounds in eBay and ServiceNow. He focused heavily on the digital transformation of Nike. He pushed the direct-to-consumer strategy, meaning Nike's app, and he cut ties with retailers such as Foot Locker. At first this sounded modern, going digital just like the rest of the world. But in trying to become a tech company, Nike lost his touch with his roots and retailers felt abandoned. One of the problems Nike had was on their Nike app, they had heavy discounts to try to get consumers to go on their app rather than go to retail stores. The problem with this is retailers had a discount as well, meaning as Nike would discount, retailers would have to discount, and it was a race to the bottom until both profit margins for Nike were hurt, and then retailers were also hurt, leading to retailers feeling abandoned. They didn't only feel abandoned because Nike was leaving the stores. They felt abandoned because the Nike products they were selling were getting less and less profit from. Alongside this problem of the discounting and leaving retailers, brands like Hoka and On Running started to take up market share, leading to Nike falling even more. Both Perez and Donahoe had impressive resumes, but it just didn't connect with Nike. They didn't come from the right background, and both times Nike drifted away from what made it great. So although everything seems like it's been Nike's fault, not everything was their fault. In 2022 and 2023, Nike faced a perfect storm of economic challenges. Inflation in the U.S. peaked at 9.1% in June of 2022, and that's the highest number in over 40 years. So prices for food, gas, and rent all went up, meaning consumers had to cut back on spending, which includes the Nike sweatshirts, the $150 sneakers, which really hurt Nike, obviously. During this time, Nike's North America sales dropped by 8%, and gross margins fell to 43.6%. The inventories levels jumped over 40%, leading to them needing to heavy discount again. So on top of the direct-to-consumer discounting, they had to discount even heavier to get rid of the inventory levels, which again, this not only crushed their profit margins, but Nike is a premium brand. So having to cut expenses starts to give away that premium brand feel. So not only they had poor leadership from John Donahoe that didn't understand what made Nike great, but they also had outside factors with the high inflation that hurt Nike heavily. But after the years of drifting, they brought in Elliott Hill in September of 2024 to take over the company. What separates Hill from Donahoe is that Hill isn't an outsider. He has a long history with Nike. He started with Nike back in 1988 as an intern, and over 3 decades, he worked his way up through sales, marketing, and brand leadership. Hill didn't just work for Nike. Hill helped build their identity, and he was able to work alongside Phil Knight to build a company that it is today. With all of his years in the company, he has an understanding like no other of what it actually takes to bring this company back to the success levels that it once had. When John Donahoe stepped down in 2024, Hill didn't just come out of retirement to help Nike, it was to save Nike. Hill's strategy is to bring back Nike to what made it unstoppable. The performance, the culture, and the connection, while modernizing where it matters. The plan consists of 5 parts. Performance is first. Refocus on athlete-driven innovation with quarterly drops of tech-forward gear. This brings Nike back to its roots, innovating for the athlete, not the algorithm. It's a reminder that performance still sells. The next one, and one of the most important ones, is rebuilding the connections with retailers. Reconnecting with Foot Locker, JD Sports, Dick's Sporting Goods, and others to bring Nike's presence back in store. Retailers were once the backbone of Nike, so rebuilding those relationships are going to help bring that identity back. Another one is cutting discounts. Pull back on promos to bring full price profit margin and brand strength. By ending the price race to the bottom, Nike regains pricing power. Marketing and storytelling. Nike wants to get emotional again, spotlighting athletes like LeBron James, SGA, Scottie Scheffler. Nike's greatest ads were never about the shoe or the product, but they were about instilling belief in the customers. This recenters the brand emotionally, and not just fundamentally. The last one is local empowerment. Give market teams in North America, Europe, and Asia more power to move fast and stay relevant. Instead of the top-down approach, Nike is letting local teams lead. A strategy that speeds up adaptation and reconnects with regional culture. Hill isn't trying to reinvent Nike, but he's trying to reignite it with the blueprint he learned from Phil Knight. One of the reasons I love Nike as an investment today is because the brand still holds dominance. In 2024, the brand was voted as the 14th most globally noticed and valuable companies in the world, and that's even after all the missteps. That ranks alongside companies like Coca-Cola, Louis Vuitton, and Apple. But here's where Nike differs from the other high-end clothing brands. Nike sells to the masses. Brands like Hermes and Chanel sell to the ultra-wealthy. So in times like 2022 and 2023, when inflation was high, Hermes and Chanel, those consumers didn't have to worry on cutting back. But since Nike sells to the masses, those consumers have to cut back on spending. That's why Nike was hit harder than the luxury brands. The customers didn't stop loving the brand. The price tags just didn't justify it anymore. The demand still has not disappeared. People still want their Jordans, kids still want to wear Nike to school, and the athletes still trust the performance. The emotional connection, the culture, that's all still there. It's just waiting for Nike to give them a reason to come back. One of the really interesting things I see now is in sports, you'll see athletes that aren't even signed with Nike having Nike on their uniforms. So you look at Anthony Edwards. He's signed with Adidas, but you look at his uniform and he's got the Nike logo right there. You look at Steph Curry, everyone knows he signed with Under Armour, but when you look at his highlights, you see that Nike swoosh on his uniform. You look at Nikola Jokic, he's not even signed with Nike, 3-time MVP, and he's got it on his jersey. You look at the 2 teams in the NBA Finals right now. You look at the Thunder and the Pacers, both of them have Nike on their uniform. Whoever wins the Finals is going to have Nike on their uniform. You look at college football today, and everyone's using a Nike football. It's everywhere. You look at athletes that aren't signed with Nike, repping Nike. The brand is still there. The brand power is still there. Nobody wants to wear an Adidas uniform, and nobody wants to wear an Under Armour uniform. Nike is still prevalent in all of sports today. So now I want to give my guidance on where I think the stock's going to be. So I think Q2 of this year, they're going to be right around break even for revenue growth. And this is because they're still implementing factors to get the company back on track, such as rebuilding the connection with retailers. But I think Q3 and Q4 we're going to see revenue growth happen again. And once revenue growth happens, I think we could see a rapid growth in the stock price again. So my plan is to continue to build out my position until about Q3 or Q4 this year, just so I can stay ahead of the curve instead of being with the curve. I've been dollar cost averaging for about 5 to 6 months now. It's now the 3rd biggest position in my portfolio today, and I don't plan to stop. I believe in Nike. Everything I've told you is why I believe in Nike, and I think it's one of the best opportunities in the market today. The real question is, do you believe in Nike? Because I do.